Hello traders, Gary Wagner here, just about 11:20 in Hawaii, 4:20 in New York. It is Wednesday, November 16th, 2016, and this is the Daily Report for Gold and Silver. Yes, we are back in Honolulu and witnessing gold really fairly flat today as we look at gold COMEX futures trading up about 40 cents on the day at 1224.90. Now it's traded to a low of 1221 and a high of 1233. So you can see that that incredible range we saw last week and a couple of weeks ago is starting to diminish. We are starting to settle down. And whether the market is up or down, our question over the last few days has been whether or not gold prices have been forming a base. And that's exactly what we'll explore on today's show. Over to silver, although gold traded higher, silver is trading lower, off about 0.5%, back below $17 at $16.95. It's had a low of $16.85 and a high of $17.23. If you recall from yesterday's show, we looked at key levels of support: 50% retracement, Fibonacci retracement in gold, 61% retracement in silver. We'll absolutely want to take a look at some charts and see how that's all flushing out. Dollar extremely strong today, hitting a 13-year high. We're looking at the US dollar still well above 100, but now at 100.40. So we are continuing to see strength in the US dollar. That is certainly not diminished at all. Let's take a look at our first chart. So traders, before we look at a gold chart, do want to quickly pull up the US dollar index. Now, we're covering this in detail in our trending market segment, but I felt it was important enough that we go over it in both of the video reports that I do today. First, we can absolutely see that in essence, we've got a triple top within the market of the US dollar index. So since, call it 2014, which begins right here, 2015 begins right here, we saw the market dramatically climb up after hitting this market at about 80 to 79 on the dollar index, moving it almost vertically to 100. It then traded in a fairly defined range, anywhere between, we had some lows at 92, or a low, I should say, at 92, but effectively call it 94 to 100 on the upside. And we absolutely see three different occasions in which we have gone to this price point but not been able to exceed it. Now, what is so fascinating about this is we are just a little bit on a closing basis above these two former tops, and if we draw our line across to see when is the last time the dollar index was at this point, we really have to go to 2013, and therefore US dollar is at a 13-year high in terms of the effect on gold today, taking away about $2, $2.50 in value. So when we look at the nominal change to the upside in gold, that's overcoming a $2.50 down pressure due to the strengthening US dollar. And so as we look at gold action today, as I said, fractionally higher on the day, currently at 1225.10. That is December futures, of course. We have spoken about the fact over the last few days that, one, we absolutely realize the pressure that this market came to just following the election of Donald Trump as our next president of the United States. Couple of days ago, though, we hit these lows coming in roughly at, I believe they were at a 1209, and we've identified a key Fibonacci retracement level, this being a 50% retracement, and it's a 50% retracement, of course, from the yearly low in gold that it had hit, which really occurred at the beginning of the year, end of last year, end of 2015. You can see that right here at about 1040. If we take a look at the lowest that it's been in 2016, that would be roughly 1060. So we're running our fib levels from these lows here up to the highs that we hit this year, which are sitting at around 1375, 1376. A 50% retracement of that move comes in, as I said, roughly between 1209 and 1211 in that area. We hit that low just a couple of days ago, that being on Monday, and ever since that, we seem to be trying to form a base around 1220. And that, to me, is significant. The reason it's significant is twofold. One, we do have a technical data right in here and technical data right in here. In other words, price points in which when the market hit this particular area, on both occasions, it provided on a technical basis, a supportive liftoff point, so to speak, for gold prices. And now we're back here. So the question is, will we see that occur again? The second thing that's important to me is when we look at the big picture through this retracement, when we consider this sizable move, the fact that it has come down really half of that move or 50%, you can still construe a bullish model even up to 61%, but you can still construe a bullish model in that you get a rally, you get a correction coming after that, and a subsequent rally. And a subsequent rally in a bullish market, of course, would have to move to new highs. But the fact that we found, at least on a tentative basis, because that could change, we haven't seen that key pivot point in which we get the bounce. And you can't really discern that until it's moved up considerably, but the first signs are there, and this is what we look for. We're at a logical retracement point, 50%. We have good historical data backing up that, so we'll have to see if in fact the market finds support in this area and begins to move higher, because as I said over the last couple of days, if it does break through here, there's a couple of points it could head to, but they're significantly lower than this, really down to the level of at least 1200 and about 1190. And traders, lastly, do want to take a look at silver, because one of the things that we talked about yesterday was the fact that when we look at the retracement point for gold, it seems like it's forming some sort of a base at about 50%. With silver at 61%, we're working from these particular lows, 1375, up to the highest point that silver has hit this year, which is above 21. 61% retracement takes you to 1630 or 1660, excuse me, and that matches with the low that we achieved on Monday when gold hit those lows at 50%. The caveat to this, although this you could still construe a bullish model, is that we have seen this disconnect between gold and silver. Again, with gold moving slightly higher on the day, overcoming dollar strength, but silver adding to the dollar strength with more selling pressure than buying coming into the market, trading off, as I said, roughly 10 cents on the day, but about a 58% decline in terms of its price on a daily basis, as you can see on this red candle. The fact of the matter is, though, it has been trading above this particular price point, which comes in at around 1680, roughly in there. When we look at the lows today, 1685 was our low. So there's no doubt we could be forming a base also in silver right in this area. Once again, over the next couple of days, we will see how it unfolds, because my sense is we're either going to see a hard pivot up, or if we break, we're going to have to come in for new lows and look for different areas that it could go to. In silver specifically, that would be about $16. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.